What's good, YouTube? Welcome back to my video. So today I want to talk to you guys about a small account challenge that I want to do. Essentially, I'm looking to take $600 and turn that into $100,000 within up to 3 years. This isn't going to be any of those pump and dumps. I'm not doing any OTC stocks. Essentially, I'm going to be doing good fundamental companies and buying leaps for them. And turning that into 100,000 by also putting in money in. So let me just show you guys. I'm going to be starting off with $622 in the account. I didn't put 600 even because of the exchange between Canada and USD. And essentially I'm looking for 100% return each year, which is achievable. Within 2 years and 10 months, looking to turn that into 100,000. I will be posting all my buys and all my sells, and I'm looking to put in on average $866 a month. Essentially, it's going to be $400 every 2 weeks, but there's some months that there's multiple bi-weekly. So what you do is you take 26 times 400, divide that by 12 months, which would give you 866, and then by the end you would receive 99,895 and 3 cents. As you can see right here, so by 35th month we would hit our goal. Nothing is financial advice. I'm not a financial advisor. I may end up not hitting that target in that time frame. I may or may not hit it. I may surpass it. We'll see. But 100% return isn't really that hard to achieve when it comes to leaps, as long as you're really doing your research fundamentally, you're using technical analysis, and when your TA and fundamentals match, you could get very good returns. Like the Fisker return we made in 6 days, about 35% return on the leaps. If they hit $17+, you can make well over 100% return. So as long as you're really waiting and very, very patient, 100% return on your leaps isn't very hard to do. But you can't FOMO, you gotta really be strict on it. So essentially what I'm going to be doing is I'm going to be posting my buys and my sells every single time, and I already started with a buy. So the first purchase I'm going to do is just after doing fundamental research, I'm going to be looking at the charts. So let me just show you an example. So Fisker got beaten down to $12. So it literally went from $20+ down to $12, and it's been trading around this $14 to $17 zone and came down to $12. Fundamentally speaking, nothing has changed with the company. They have more money. Nothing bad has happened, and this happens all the time with stocks. Some companies are going to get beaten down for absolutely no reason. One of my biggest returns I've gotten for leaps was Nordstrom. Nordstrom got beaten down completely to the point where they had more money and inventory than the actual value of the company. And it literally, once the market realized that, hey, Nordstrom was very undervalued, it literally went 100% plus return. So you just got to do research, use your TA, and at that point, those leaps were over 1,000% return. It doesn't happen as often where you're gonna have huge returns for your leaps. It would happen probably a couple times a year. You just gotta really be picky on what you choose. So this account is going to be an accounts challenge only. I'm going to show you my balances, my purchases, my sale. I'll keep you updated on the Discord. If you're not in there, the link will be down below to join. And I won't be mixing this up with my actual accounts because I have a separate account for day trading, a separate account for options, a separate account for swings, a separate account for my long term, and now a challenge account. I don't mix them because I don't want my allocations to be affected, my balances, as well as if I'm having a bad week when it comes to options, I don't want that to affect my swing trading or vice versa psychologically. So let me just get started and show you what we're going to be doing. So first thing you want to do is find a company that is fundamentally good. I haven't done my full research on Plug, but let's say you did your full DD on Plug as an example, and you know that Plug is very, very good, right? Fundamentally speaking, you're going to want to go ahead first and look at the chart. Chart is what matters. You do not want to be buying leaps at the highs. You want to be buying leaps when things have been beaten down and you know that fundamentally speaking, they're good. So let me pull up the weekly chart. So if we look at the weekly chart, you could tell that the stock has been beaten down from like 75 plus all the way to 26. Let's say we've done our DD. No reason why this company should have gotten beaten down. There's divergence as well right here. So you'd want to maybe consider taking a position on plug, right? So what I do is I look at my DD. I look at the chart. If the chart's beaten down, do my DD. Once I do my DD, I do a starting position. Maybe something very small, like one contract, just to have it on your account and have it on your radar, right? So let's say you take a one contract position, and then you wait and you look for technical analysis, whether it's on the daily chart, weekly chart, monthly chart, whatever the case may be, and you'll get in. Typically, I'll do weekly and daily chart, sometimes even the 4 hour and daily if those two match together as well. Take a position, and once the TA matches, start buying in a little bit more heavy, and I would do up to 3, but I would do 3 or 4 buys max. Starting position, dip buy once the TA looks good, and maybe one more buy from there and go in a little bit heavier, and at that point you could ride the wave back up. So after I do my DD and I look at the TA, I would also look at my analyst report. So I would look at the analysts and see what the analysts are saying. I wouldn't solely base your decision on the analyst, because analysts are wrong a lot of the times, but they do play a big effect when it comes to stock prices, because when there is an upgrade or a downgrade, if the company is big or the name of the analyst is big and it holds a lot of weight, that could definitely affect your the stock price. So I would look at it and see, okay, the average is $41, highest 78, lowest 27. If the lowest 27, you want to get stocks that are lower than the lowest analyst, right? And you have a 52% upside, right? Look at the recent analyst, you see buy, you have a hold, and then you see upgrades, etc. So you're looking at that, the recent ones have been good, and at that point, you'd want to consider taking a position. So what you'd want to do, go do your options calculator. So there's options profit calculator, type in the company plug, hit get price, and hit select. So I would select a year plus out. I would go for the 20th of January 2023 and possibly look at the $30 strike price. If you want to be a little less risky, then you'd want to go for the $25 strike price, because the spread is less. The spread is less than the others, and as well it's in the money. If you want to be less risky, you go a little bit in the money. If you want to be more risky, you go outside the money. But if you want to play it safe, go in the money. Well, let's say we go for the $30 strike, the $25 strike price, $8.10, one contract, calculate, and basically you'd be buying in at about $27, okay? So if the technical analysis plays out and it hits that $37 mark, then at that point, let's say by the end of the year, it hits that $37 mark, that's an 87% return, and in such a short period of time. If the longer it takes, the less you'll make. But look, you could make, like, even if it hits within 1 year, it's over a 50% return. And if you do the math on the stock itself, it's only like a 37% return. The sooner you are correct, the higher percentage you'll make. And that's essentially what I'll be doing with these contracts. So let's say it started with the first contract that I bought. I bought this on Friday. I got Clover. The reason why I got Clover is, fundamentally speaking, I think that they are undervalued right now. The stock price has hit much higher, but this was because of the crazy amount of volume, and I think WSB was on it, so Wall Street's bets were on this one. But if it does end up pumping back up, then that's good. But essentially speaking, I like Clover as a company. I think they could achieve very good things in the near future. There was on the 4-hour chart divergence, but however, the larger time frames aren't looking too good, like the weekly possible head and shoulders if you ignore this large wick, but you have a boom, boom, and then boom right here. But I just took a starting position of one contract, right? If this 4-hour plays out and it gets above that 783 level, my area of target that I'm looking for is 990 to the 200-day moving average of $10.13, right? So for Clover, this is what I'm looking at. So if it does manage to hit that $10 mark, I could easily, by the end of the year, make 42% return, 50% return. If it could hit that $13, like you see, the higher it hits, the sooner, the more you could possibly make, right? And if you look at the analyst as well, The analysts aren't too high on it, but it's only a starting position that I'm taking. If it does go lower, I'm going to be basically purchasing more. Analyst rating is 867, high is $10, but yeah, so just the starting position that I took right here. So CLOV, January 20th, 2023, $3. It was worth about $3. Bid was $2.90. Ask was $3. I got in at $2.95 or $2.96, but because of my fees that I have to pay with Interactive Broker, because I'm from Canada, we don't get free trading, my average goes up to $2.97. If you're gonna get in, try to get in lower than me, but like I said, nothing is financial advice. This is what my portfolio currently looks like. So I have $618. I'm currently down $4 on my options, and it's only a starting position because it's only one contract. I will be putting another $400 this coming Thursday into it, or by next week. And every 2 weeks, like I said, I'll be putting in an extra $400. I will be buying other options and possibly dip buying on CLOV if it does come down and the technical analysis is there. So my second dip buy is only going to be once the TA is there. If the TA isn't there, I'm not going to dip buy until the TA is there. And for this contract, essentially, I have until January 20th, 2023 for the stock price to hit $12.97 for me to break even. If it does hit that before then, I'm going to be making money. So that's pretty much it. I will be keeping you guys updated in the Discord right away every time I purchase something on this challenge account. And hopefully we are able to hit that $100,000 mark within 2 to 3 years. And I'll be also making a video every single time I do decide to buy or do decide to cash out. If you guys do have any questions, you guys always could DM me like you normally do, or message me on the Discord. But yeah, until next episode, peace.